Hi everyone, this is Travis Clayton coming to you on a pre-recorded video as my live broadcast failed a number of times and I gave up. It is the 17th of February 2019. What you're about to hear from me is not advice. Please don't take it as advice. You should seek professional advice. But these are just the views of myself based on a lot of research. Take it with a grain of salt, and this is just for a bit of fun. But by all means, do your own research on all things that I say. Don't just listen to what I say. You can lose substantial amounts of money in this game, so be careful out there. Alright, that's the disclaimer out the way. Today we're going to look at the price of silver in US dollars firstly. We're going to take note of the volume and talk about that volume. And we'll look at silver in Australian dollars. We'll look at how the patterns are similar yet different. And we'll wrap that up by looking at the Australian dollar. But the first thing I wanted to point out to you guys was this little website here. This is usdebtclock.org. And you can see here, this is the US national debt. And just this week, it ticked over $22 trillion. That's right, $22 trillion. And of course, interest needs to be paid on that. You'll also see here that we have the US federal tax revenue. Well, this revenue only pays for half of the services that government provides. The other half is provided by borrowing money, which is where we get this $22 trillion, or at least part of the $22 trillion from. So this is an accumulation of a lack of this revenue. Okay, and of course, the higher this goes, the more revenue will be required to be allocated towards the interest to pay this debt. Okay. At the moment, it's about half. So the other half, they're borrowing. All right. You can see how that is not a sustainable path. All right. When we look at it per citizen, $67,000. Then if it's per taxpayer, so the income earners, it's $179,000. And you can see how that might be very hard for somebody to pay off unless you increase taxes or find some other way to get the money back from the public. Okay, whether it's through, well, worst case scenario would probably be confiscating assets from the public to repay this debt here. All right. So if they're going to do that, while asset prices go up, then perhaps it's sustainable. But if asset prices go down, then there's a really good chance that won't be paid off, even if everything was sold up. So they really do need stock markets to be up and housing to be up, because if they're up, then worst case scenario, sell all that and pay off some of that debt. The conundrum, of course, is that if we all sold at the same time to pay that debt off, then the value of the assets would simply get crushed. And that's where it all ends. Okay, let's move on to the charts. And by the way, these sorts of figures are exactly why precious metals may be assets to hold in the future. But let's have a look. Okay. Oh, it's not letting me change. There we go. All right. So here we have silver in US dollars. Silver in US dollars. Okay. Currently sitting at $15.78 as of Friday. Okay. Just quickly, let's go. Oh, it's about time. Maybe I'll explain that another time. So looking at this, here we have price of silver in, you can see down here in 2011, July. All right. We can see we have a price spike. This was after the GFC when people thought the world was going to end. And what they did was they started printing lots of money, which flooded the financial markets with cash, lowered currencies, and so the US dollar collapsed and silver went up. Okay, gold did a similar thing, although gold was probably a bit earlier. Okay, got up to, you can see over on the right here, just under $50, 49 odd dollars, and then it came crashing back down. All right, the volume is important here because this volume does not represent silver actually changing hands. This represents trading a paper contract for silver. It's not the real deal, okay? So the powers that be, they simply get a printing press, make certificates, put the word silver on it, and say that that's to be sold to the market. And so they just invent these things. And when they need to manipulate the price more, they just print more of the certificates and put them out into the market, and then that will affect the price. Okay, so what we're seeing here is that the paper price is actually setting the price. It is not the physical hard bullion itself. Okay, not a lot of people have gold and silver coins and bullion. Very few people do. And so that's a bit of a, that's why they regard it as a relic, because not many people do. They actually choose to trade the paper because it can be done within seconds. Okay, it's more convenient. All right. Without going into that detail, let's have a look at where we're at now and what we might expect. So you can see down here we've got a bottom. All right, that's formed here. Just put a mark in there. I don't really want to keep this too long, all right? But because we had this low here, in the future, if price ever hits it again, it tends to find support and rebound. So that's kind of what we're expecting to occur. Just bear in mind, each one of these bars is 1 month, okay? So the bars show, if I zoom in here, okay, so take this green bar here, all right? So at the start of the month, the price opened here. At the end of the month, the price closed here. Okay, this pin bar indicates that during the month, price rose up, stopped at the top there, and actually came back down. So it pushed higher, but then retraced. Okay, in this case here, pushed lower, but then came back up. All right, usually indicates resistance. All right, so resistance at the top here and resistance at the bottom here, which is why for so long we didn't see price get down below it. But then here in July, it touched it, and in August it plummeted below. Okay, we might have thought that this was going to keep going, except for the fact that we had this support over here. Okay, which is why some of us were buying silver in August, and you can see it here. Our price was, oh, actually, sorry, no, this is US. I'll talk about that when I have the Australian value up. Okay, measured by a different currency. You can see here, okay, zoom right in, go to auto, it'll show it up a bit better. Alright, so you can see here we've got this downward trend, tried to break out here, failed, and then went lower into August, found a bottom down here, yeah, almost right on where the bottom is here, and then we've just since turned around. So that was November, December, January, and we're into February, and you can see that we're just punching. You can see, well, firstly, this failed here, but now we're punching out again. I think we will know by the end of the month whether this might have legs. The other thing I like to see is this Bollinger Band begin to turn back up. Okay, that's one of the indicators for me that tells me that things are turning around. All right, that's your monthly chart. For US silver, if we go and look at a weekly chart, so 1 week. By the way, if you're interested in this sort of thing, open yourself up a tradingview.com account. It's free. For Australian stocks and other markets overseas, then you do have to pay. But there are free markets on here. Silver, I think, is one of them, where you can actually look at 1 hour charts, 15-minute charts, I think. But because I pay, I don't actually remember. All right. So on your weekly, you can see things turned around. We started to head back up. Okay, and that's where we're at now. At the moment, it's looking strong. There's no reason to be selling at this point. No indications whatsoever that selling is what we should be doing on a longer term time frame. 1 day. So 1 day, and this is probably the chart you've seen me post. Maybe I did it once. I usually post it in Australian dollars. But you can see here's that rally. Comes all the way up here. Taps the blue line. Probably should have been a sell there. I think we talked about that. I expected it would come down further. Sorry, no. I was hoping it would stop here and then rebound. It dropped a bit further, but then did turn around and go higher. It looks like we may do the same thing here. I would say, looking at the daily, if we break this downtrend down through here and we head higher, it would be bullish. Okay, you'd be looking to get in. We've had a big wave up. Okay, and we expect we'll head higher. Okay, let's leave that. Go back to the 1 monthly and we'll look at the Australian chart. Oh, actually, here it is here, I think. AUD, yep, Australian chart. Same thing, here's that pattern. They're very similar. Okay. Downward trend. Downward trend. You can see that's where it's trying to break out. Zoom in. Remember, of course, we're looking at the monthly long term. Where's that month of August? Here. So we bought here at, was it 1990? Okay, so we did really well. Got in at the bottom here. That's our price right there, pretty much. We had to wait a few months. I thought it would actually come up a bit earlier, but not the case. But we were very bloody close, and I'm happy with that. Had another month of the waiting around to see what would happen. We tried to print a lower price here, but it rebounded. And of course, here we see that it tried it again, rebounded, and this time went higher. We could have had another opportunity to buy in here, but because we'd already bought, well, we'd set our trade and we're ready to sit. And so since then, we've been looking pretty good. And I do expect that to continue higher. All right. Worst case scenario, in my mind, is that if we can look at this low back here, all right, I would say, you can see that we stopped here and we've turned. I would think that if we actually decline back down here, I think we could probably be feeling a bit nervous. But having said that, I would expect that this would hold. All right. So if I'm going to get out of silver, I'm going to wait and see if it actually gets lower than that. I think that is a very remote possibility. I think it's more likely we'll head higher. Okay. But see this point here? I expect that will offer resistance. And interestingly, if we look further back, you can see that it hovered around here and kept bouncing off that. So I'd expect this will probably provide some resistance as well. So I'm at somewhere in here, I think we could expect something a bit more harder to get through. All right. So that would be the time frame, something like that. So we might see we either stop at the bottom. Actually, we could stop anywhere within inside the rectangle here, or we could stop at the top. If we stop at the top, it's a bit more bullish. Stopping down here is probably fairly weak. I would expect though that we'll go to the top. Okay. What happens after that? Well, two options. You can either come back down and then go higher, or we just simply break out and perhaps we get up here, all right, at $34 odd. Okay. So we don't know. These are just probabilities. The other option is, just quickly, get rid of that for a sec. I'll move this one here. Okay, come back down here. So tap this blue line, come back down, possibly then we go. Like so. All right. Looking at some of the other factors though, things like how the US economy is going, what's happening with the US currency, the Australian currency, knowing where they're at and what signals they're showing will give us a pretty good idea as to whether this will continue higher, break out, or retrace and then go, or hit the bottom of this rectangle, pull back and then go. We have to play that by ear. We can't predict. We can only look at the odds, the possibilities, okay, probabilities. The fact that price is being squeezed into this sort of triangle sort of shape indicates that at some point it's going to make a decision. It'll either head higher or it will break down and head lower. Okay, and we're prepared to do whatever the charts tell us to do. Okay, looking at the dollar. Okay, let's put a couple of lines on here. Trending down. Now you might argue that, okay, look, we've hit a top. Okay, and it's now falling off this descending line. And we might head lower. Or we might push through and head higher. My theory is a little different. I actually believe if we draw a line between these 2 points here, this descending line, you can see it's tapped the line, then it turned around and it went higher. So I'd actually say that that's probably a bit more realistic, but not guaranteed. Okay, I'll just clone that real quick. Same angle of descent. Okay, come down, touch the bottom. We would expect that we will actually touch this blue line at some point. Now from there, once again, can go either way. But the point is, the blue line is going to be an inflection point. Question is, does it break through and head higher? If it does, probably stop at this previous high, something like that, or it's going to collapse and come all the way down here. Okay. I actually think the sooner it taps this line, the better, because the longer that takes, the steeper the decline would be to get down here. And that's only because we've got resistance here, or support here. So that would be a target that we might look to see if the US dollar actually does get down there. It would match up. If we went lower, that's a possibility too. Okay, somewhere in that sort of area. So probably earlier would be better. Now, that may not happen. All right, we may actually find that this is the top, and perhaps we fall from here. Okay. Now, one thing we should know, this is the US dollar. If the US dollar falls, precious metals go in the opposite direction, in US dollars. Okay, so we'll do the same thing here. Pop on our arrow, US dollar falls, precious metals will rise. Okay. If, on the other hand, we actually rally here, break through, and end up the top here, then we could expect silver to fall further. Okay. It might possibly hold here. You would need to see a lot of silver buying to fight that deflating effect of the rising US dollar. If we break through here, that might not be another indication that we need to offload our silver and get rid of it. It means we were wrong. Okay, back to the US dollar. So we might find that we get a point up here. These are all possibilities. Nothing is certain. Okay. Whether it comes up here or down here is to be a story to be told in the future. Okay. But my point being that if you watch the US dollar and see what happens in here, okay, from there you'll have a pretty good idea as to what's going to happen in other markets. All right. A fall here would also support rising stock prices in the US. Okay. Now take that, what we've just spoken about, and now let's look at the Australian dollar. Okay. Back here we have a point of resistance. So you see price stopped, bobbled around, hit it again, and then rallied. Okay, all the way up here. You would not describe this as a strong rally. All right. You would describe this as a fairly weak rally. Then we fall over. Okay. Get this pin bar, punches through the bottom, comes back up. This is a bullish move when we see that happen. Okay. Because price went down there and said, no, don't want to be here. And it turned around and went straight back up. Okay. So in terms of what we expect the Australian dollar to do, we can either rally. All right, now we've got resistance in here and here. So we might rally to here. Okay. Or we can come down through here. Okay. That's a possibility too. All right. So what I'm saying is maybe perhaps come up here somewhere, turn over, and perhaps roll back down. Okay. Now, what's likely to happen? If it did roll over, you can see over here we've got some resistance. All right. So we might come back down here, stop, and turn, and perhaps we rally around, and we'll see what happens after that. Okay, not rally around, but just chop around, up and down. Okay. So again, back to the US dollar. All right. So if we see this rolling over, that also means that this is continuing to rally. Okay. And if that happens, I expect we'll get to here. Now, that action for Australian gold means that this move will probably stall. And that would give weight of evidence that we may actually come back down, tap this before we go. All right. So this point here is basically the same as this point here. Okay. Bear in mind, to deal with this, okay, one way to deal with that is to reduce your currencies. When you reduce your currencies, asset values go up. So when you sell, that's when you pay that debt off. Okay. All currencies in the world have been heading lower. Okay. This pattern can be seen across many currencies that are matched against the US dollar. All right. US dollar is up. As you can see, it's up. All other currencies are down. Okay. So they're actually, other currencies are a bit more, I guess, sustainable than the US. The US will have to roll over at some point, particularly the more that this debt increases. I mean, it's unsustainable now, let alone the future. Okay. All right. So there your alternatives. Thanks for listening. I covered everything I wanted to. If you've got a question, pop it down, or if you want me to look at a particular stock, I'm happy to do that too. Even if I just talk to you privately. You can message me via messages on Facebook, or you can text me if you've got my number. Okay, that's it, guys. Thanks very much.